What's up, guys? My name is Jared King, and in this video, I'm going to be teaching you some high IQ techniques for entering and exiting trades. This will include risk management and one-time framing. So it's like a one-time framing one-on-one. I'm going to teach you. Once you watch this video, you're going to be pretty blown away by how this concept is so powerful. I'll be teaching you via me trading live, and it'll be trading with funded accounts. So it's risk on, and you're going to see the high IQ trading techniques in action. Why should you listen to me? So I make 20K to 50K depending on the month trading. And I also have been one-on-one mentoring traders for over a year. So I understand what you guys need to learn to like take your trading to the next level. I've also have traded and obsessed over 5 different strategies altogether. And I'm not meaning I just went over them, like deep dive obsessed with them, and pretty much understood everything about them. And why am I doing this? Why am I even making this video? I want to help traders change their lives just like trading changed mine. So I was not a happy camper before trading. So I want to give back. And I believe in karma. And everything comes at a cost, whether it's time, effort, money. And this is my cost, giving back to the community. I think I am filling my karma bank, and I'm giving back and sharing what I've learned and hopefully saving you guys some time. And this way I'll have a bank of karma. Got lots of good karma coming my way. So let's go ahead and get straight into the video here. All right, let's go over risk management. So something I'm a big fan of is having an initial risk, which is going to be the total risk if my stop loss gets hit. And I set an emergency stop loss. It's far above where I'll actually exit the trade if I'm wrong. So I say save your stop. That's something you should always be doing, because I don't know about you, but I definitely know when I'm wrong. Another thing is initial risk needs to be a max 10% of my drawdown. That means if you have a $2,500 drawdown in your prop firm, or if you're using a cash account, set a max drawdown amount you're comfortable with losing, and whatever that may be. It could be the whole account, it could be 10%. It's up to you. Um, and we're going to be entering on the right side of the V, and we use market orders only. No take profits, no limits ins. And I'll explain why to you here in a little bit. All right, let's talk about trading on the right side of price. What do I mean by that, and how does it work, and how it will improve your trading? Let's say price is coming downward, right? And you have an area price you want to enter long at. Is that you don't know what's going to happen here. You don't know if price is going to stop. It might just go all the way through, trigger you in, and stop you out. I would say that's probably what's happening more times than not. Just be honest with yourself. It's just kind of like an elementary way of trading. It's unlogical, really. I guess that's the best way to say it, unlogical. The better way to do it, the way that is going to increase your win rate, it is going to give you better risk versus reward. It's going to define your risk. It's going to make you feel more confident in the trades. It's just such a huge thing that's going to impact your trading in many ways. Because instead of setting a limit order there, we're just going to wait. And I'll show you in a second how setting a limit order here does not get you into the trade at a better entry price. That's what you think. You think that's going to get you in at the best possible time, but it's actually not. It does quite the opposite, actually. So we're going to wait until price comes into our area, and until we see, just a few candles in the zone that kind of tell us that the low has been set. So it's called the right side of the V because this would be your V. You're not trading on the left side. The left side is a no man's zone. That's where you don't want to be trading. So now that price is coming into our zone, we're going to go ahead and enter. Now we know exactly where our stop goes. We know it goes right fucking here. It goes right there. Our risk is very small, and our potential reward is very large. Now let's go to price here. I have an example. This is live market. I told you in the beginning I'd teach you in a live market setting. So here's my point of interest. Price has gone into it. It has put in a few candles, you would say. So let's go ahead and drop down. Now here we are on our lower time frame. Let's draw our V. It's definitely on the right side of the V now. Does that mean the trade's guaranteed to work out? No, but it's going to really increase your chance of success. Because what has a better chance of turning around. This right here where price is in this phase, it's going up. Let's say I want to go short. What, this part or this part? Obviously this part has a better chance of success. And you'll notice something if you really look at the framework around price movement, is that it pretty much always involves a short-term consolidation before it reverses. Short-term consolidation, short-term consolidation, short-term consolidation, short-term consolidation, short-term consolidation. And I could go on and on and on. I could show you every example on the chart because it is every example on the chart. Every single one of them has a short-term consolidation there. So doesn't it make more sense then to wait for that consolidation to take place and then show you it's going to work? And it does, right? It has to. It's the most logical way to go about it. For me, this isn't that great of an entry because it's still working its way down here. I'm gonna go ahead and enter though because it has stopped. Like it's not going down anymore. It hasn't in 3, 6, 9, 12 minutes. Go ahead and enter right there. My stop's gonna go just below price. Now, I know that if it goes back below here, I'm wrong, right? It's no longer going up. So my risk is 3 points, guys. Now, 3 points total. I had someone on Twitter the other day say, my average risk is 20. What are you talking about? And I'm like, 20 points? And that's why he's having to risk 20 points because he's using a limit order to enter. And they do that for a couple different reasons. They're trying to save a few dollars, the spread, which in futures is nothing. So they're penny pinching, and they think they're saving money, but actually they're losing more trades. A stop out is 20 points. That's $400. So they're trying to save $3, but end up losing $400 way more often. Not the most logical thing. All right. Now, let me explain one time framing to you, and we'll go ahead and get into the rest of the video. So we can see here that it did in fact work. I just wasn't paying attention to the trade and didn't get a chance to exit. I'm going to go ahead and exit now. I'm not really interested in it no more. I just really took the trade to show you guys. What's up, guys? You may have noticed if you were part of my YouTube membership that you got an email with a refund, and then you also got, booted out of the membership. So no one got booted out. I just simply shut it down. And I did this for a couple different reasons. I did it to keep people, these larger creators that follow me, to stop stealing my content and reteaching it in their own kind of way without giving me any kind of credit. That's number one and foremost. And for two, the live streams sucked. Like they were lagged a lot. It wasn't real time. And I want it to be real time so you guys can benefit from the price action with me. And so therefore, I shut this down. And then I moved it over to a Discord. I now have a Discord. It's called Market Masters. You guys that were in the YouTube membership are grandfathered in. So what you're going to need to do is screenshot that email that you received, and then you're going to show it to my moderators, which are Matthias and Alex, and they will help you guys figure that out. They will get you guys all set up. So if you want to do that, if you were not in my YouTube membership, there will be a paywall for you guys to go ahead and pay for. And then, it's relatively cheap for a live stream every day and all the stuff that we're building out. But I also am still going to do live streams on YouTube. Like that's not stopping completely. It's just not going to be that once a day New York session live stream. It'll be 1 to 2 times a week during New York session, most likely. And you will only have to pay $1 a month for that. That dollar is just to keep the trolls out, just to keep the argumentative people that don't even follow me out of the chat. Because if I don't charge membership for it, I can't keep people out of it, right? So I need to charge them, something to keep people from doing it. And that's it. That's the announcement, guys. So I'll put the link to the membership to watch. If you want to watch any of the older videos, which are hundreds of videos that are all really, really good, you're gonna have to pay the $1 to be able to view that content. Alrighty, guys, I appreciate you, and sorry if I didn't give everyone notice. I just figured everyone was on stream, and
I just thought you guys knew because we've been talking about it for a little bit. So uh, maybe I should have made a community post or two before I did it. So appreciate you guys. I'll see you guys in the charts
Okay,
trading.
one time framing. What is it? How does it work? I'll show you more in depth in like live examples, but just for a quick breakdown. So it's pretty much one time framing is a candle not going above the previous candle's high. Wait for this dude to get done painting. If we look at this picture I have here, you have this candle, right? And then it does not go above that candle's high, right? This candle goes down, comes back up, but where does it not go above that candle's high? Down. And then this continues. This can continue for, I've seen it go on for 100 points or more on a really low time frame. For that to take place, that means that the um, algorithm in the market is pushing the price that way, right? So we can see here, let's say you were targeting this high here. It starts one time framing. You don't want to exit until it breaks the previous candle's low. So you got 1, 2, 3, 4, 5, 6, 7, 8, and then there it breaks it. So I would exit on the break right here. So right there, I just push exit all and I'd be out. And then if I was targeting here, I would have got a lot of extra points. It would have been 8 extra points. So 8 times 20, it's $160 extra per contract. So that is one time frame. Now I'm gonna go ahead and push play on the recording, and not the rest of it, but the next part of the video is going to be me live trading earlier today. It's now 9 p.m. I'm editing the video and adding into some parts that I think needed. Um, the rest is from New York session today. So enjoy, guys. All right, what's up, guys? This video is going to be about how to enter trades in a way that allows you not to have to risk too much. So we came to the bottom of an area. So this will be a phase one retracement here if it's going to retrace. I just took a stop out there, but I wasn't risking a whole lot. So that's the beautiful part here. So we also have this area of balance here that price has just dipped into, but I think it's going lower. So if I want to trade this, how can I trade it and allow myself not to risk too much? Now I got to decide direction first here. So based on whichever direction you want to trade with, right now I'm still trying to decide. I think price could come down into here, but this is framing the trade. The first step is frame the trade, where you think price is going and why, and how far away is that from you. So I think price could come up to here. That's one option, which that's about 50 points away. I think price could come down to here, which is about 30 points away. So there was my confirmation that price is breaking down. So I'm just going to go ahead and enter. That's all I needed to see. I know that's what I was looking for, but like you're like, well, you didn't wait for anything. You're chasing. No, I'm not chasing. I see that price is one time framing. So one time framing is like one of the most powerful concepts in trading. Um, we'll go into a little bit more about like how to identify it, when it's most likely to occur, and how to trade it a little bit later in the video. Right now, I want you to focus on risk. That's a part of this video. This is the first section is risk. So how much am I willing to risk per trade? So usually about $250 with 2 contracts. And where am I wanting to scale out? So professional traders scale out. We don't just trade without scaling out. It's like a must do kind of thing. So if my risk here is 3 points, then my scale out needs to be at least 3 points. So when I take one off, it needs to be at least 3. So that's about 5 points right there. But I'm going to wait for a little bit. I want to wait for expansion. We're still one time framing down. We have not taken out the previous candle's high. So that's what one time framing means. When you see price from here on, it has not taken out the previous candle's high. It has not even wicked above it. It has not closed above it. It has not gone above it at all. So when this is taking place, just let that work. There's no reason to exit until you see that stop working. So nice push down there. This is where I'm going to take one off. Beautiful trade, right? So that first loss I took right when we came on was pretty savage. And then now price is already at my profit target. I'm going to go ahead and exit there just because of my balance is a funded account. It's at an all-time new high now. So it's never been that high before. The trailing drawdown is following me. Price already hit that to the tick within really quickly, a lot faster than I thought it'd be. All right, so I think we might get one more push down here. It didn't quite finish its job, so let's go ahead and enter again. Still no close. We still have not had a close above the previous candle's high. Let's go ahead and fix this here. And that's why I entered there. I knew that it was unlikely to close it back above there. It's just unlikely. My stop loss is going to go just a couple points away. I'm going to go ahead and take one off there. And then now you guys seen the power of one-time framing. Our goal as traders should be to get into the market and get a one-time framing trade because those are the best trades. It's when the market is spooling, it's expansion, it's displacement. It has a lot of different names, right? You can call it whatever you want. The term one time framing comes from market profiling a long time ago. I didn't come up with the word. It's not my idea. I think that would be James Dalton's, which is kind of like the OG in the trading world, the first guru, if you will. So we should see price come down one more time, right? Maybe let me adjust this real quick. Yeah, there we go. About 1,000, $1,500 or so. That first loss I took was about $300, and then now I'm up 800. So not bad trading, right? So now we want to be looking at the one time framing here. Does it take out this candle's high? If it does, it's probably a good idea to exit. See that? Power one time framing at work. So I still don't think it has completed its objective though. So I'm looking for one more short entry here. I think this is going to be it. You notice I don't trade with limit orders. I only trade with market orders. I don't set a limit for anything ever. All right, so that's where it gets a little tricky. So when I push the button, it went down quite a bit. I'm gonna go ahead and exit right there because I don't feel comfortable with it. I was risking way too much. I feel like price could push up one more time. That's going. No, I exited again. I'm all about like exiting if I think I'm gonna be wrong. Now it did chop me up those two exits right there. The first loss was like 120. Second was like 200. They do add up very quickly. So now I want to see price come into this area here. This video isn't about strategy. It's about trade management, which is far more important than any strategy you're going to trade. So now we have a double top forming there. I'm going to go ahead and enter one contract. This is something I often do if I feel like that may been enough for it to reverse. I'll enter one contract. And once I see it like go my way, start working, then I'll quickly add on the second. But I don't have a big enough account to be risking 9 points. That's way too much risk. With two contracts, anyways. One contract, it's about right, but two, no. So I think that's what I need to see there. There is some kind of like weird pattern going on here. I'll probably add if it pushes up one more time. I'm just going to go ahead and risk it for the biscuit here. This means that I have to be willing to exit if it pops back up. Like if it pops back up into here, I have to be willing to go ahead and cut it. My stop appears for an emergency. This is not my risk, right? This is the emergency. I will exit if it, I just said I will exit if it goes above like this area here. Keeping that is the hard part, right? It's one thing to say it, but it's another thing to do it. All right, so that means that my initial risk is about 5 points. So I'll take one off there. That way now I'm risk free on the trade. That's the important part. Make your trades free. You can make them free. And then if you go past your initial risk was 5 points. If you take profit at 7, that means even if you get stopped out, you get 2 points profit. You get $40 no matter what as a gain. All right, so now you guys are seeing the accuracy of my trading here. I called this pretty much to the tick here. Hasn't quite hit it yet though. So yeah, drop down, but it didn't quite get all the way there. I want to see if price is going to reject here. If it does, then I'll add on to this. You can also use trend lines to help you do this. You can put a trend line from here to here, which would tell me that, yeah, it's probably not going to go up. I'm going to add on to this here. Now, whenever you add on, you need to move your emergency stop down. Now, my max risk for this is pretty much if it pops above where I entered too much, tries to break this trend line in any kind of way, I'm going to exit. So that means my initial risk is about 3 points. So I can take one off at any time now because I'm at 4 points profit. Still looking for this kind of area here, right in here. All right, you're gonna watch me save my stop here. Pushes up again. That's the term I like, save your stop. Don't allow it to get hit. Don't let it be taken advantage of. Save it. Scale one out there. So now I'm about back to $800 profit here. All right, boom, there it is. And give it a second here and see if it's going to continue downward. All right, there it goes. Yeah, I'm going to go ahead and exit right about here. I'm out. All right, so you guys saw me make a pretty penny there. And then I just entered another trade up to see it go up here. I'm looking for it to continue upwards. Beautiful price action here. End of day close. You have earnings right now. So I'm gonna take one off right there. I think price is gonna go to my original outline that we outlined last night on stream. I think I may get lucky here and it may continue upward at a fast pace. Take one off there. So now I've scaled out in both accounts. I'll move my stop a little bit right there. And then beautiful fucking trade, man. Doesn't get much better, guys. So now we're one time framing, right? This is like one time framing up. I'm not gonna exit yet. I'm gonna be wary of this area here. Make sure it does not stop at half back of it. I wanna see it continue upward to my zones up here. So I'll allow like, like it to come like down there, but that's it. One push down, not two. So we have one push there. It did not push past that initial drop. You see that? That's what I meant by allow one push. I don't want to see this come back down below where it opened at. As long as that, I'll stay in it. Okay, so now I got somewhere to clearly put my stop at in both accounts. So this is like really helping this account because this account was feeling the pain. So very nice. Still one time framing. So now I'll stay in as long as it does not violate that candle's low. All right, you see the power one time framing? It came down there, but it did not break it. So I was hoping this would happen. That's why I meant I'll explain one time framing more to you later. I was hoping we get a good expansion move where I can really show you the power of it. So now we're in long until that happens, until that breaks. And then if this breaks here, if it breaks this high, that will be a end of day drift and it should just blast. It's starting to consolidate after I move up, so we need to see it continue moving up here. One time framing still is not ended. Now it's these candles low. Now, if that isn't a best example, one time framing, the power of it, I don't know. I think that might be one of the best examples I've ever seen because it's consolidating, still not violating the lows. But it's still grinding up. We haven't made a lower low yet, so beautiful push here. Now it should just blast them. Yeah, show them what's up. I'm going to add on this count. I'm going to go ahead and add on once it pushes here. Pretty much once I get a close above that high, that's what I'm going to add on because that's the end of day drift right there. Well, I almost pushed exit because I thought I was going to break that candle's low, but still one time framing. So unless that candle's low is violated, we stay in. Look at that. Look at the power of this, guys. Like, look, it's just unwilling to do it. Oh, almost. All right, that's it. That's usually you're likely to have a pretty deep, nasty retracement afterwards sometimes. I missed my exit, so we'll see if it's going to push down here or not. See that? So not only does it allow you to stay in the trade for a very long time, it gives you the perfect out because it's most of the time it's going to be a really low drawdown from your peak to your exit. It's not going to be very big. All right, so I'm going to enter here as it's coming in that doji and acting as support. Probably going to long this as soon as it pushes up. So that's it, guys. That's the end of the video. Hopefully this guys helps you with your entries and exits and how to navigate in and out of the markets. So in this video, I made a little over $1,500. So not too bad, right? Nothing like crazy. I wasn't like doing anything crazy, but I'm not copy trading. I'm just trading one account at a time. I will see you guys in the charts. All right, so we'll do a giveaway. But first, I want to tell you about my website. It's verifiedfundingcompanies.com. The best discounts in the game you're going to find anywhere. It's for you guys, traders, me. And these are all companies that I 100% trust. I guarantee they pay you out. If you use my code, you follow the rules, and they refuse to pay you out, hit me up, and we'll get you paid. I'm going to pay you. So a lot of good discounts are going on right now. You have Bullnox, 83% off option 1, and it has option 2, 58% off. Apex, 80% off. Only 1 day to pass. In this video, I was trading an Apex account. Take Profit Trader, 40% off, and then no activation fee. That's a really good discount. And then Top Step, they're about half off. And then Trade Day has a new website, 40% off, no activation fee. Tick Tick Trader has these bundle accounts. They have straight to funded accounts and a mixture. So let's get you guys in the giveaway. All right, to enter the giveaway, which I'm going to be giving you guys a chance to win 2 free Bull Knox evaluations. To enter, you have to like the video, subscribe to my channel right here, and then my newsletter as well. I'll show you how to do that in 1 second. And then comment below and answer the question, how are you going to use one-time framing in your trading? I think you could get really creative with this. I imagine you could find a strategy around it. Wait to see 2 candles in a row and then enter once it pushes past that second candle and then stay in the trade until it breaks it. I bet that's a viable strategy with a good win rate. Um, you can use it for exits. You can use it for entries. I personally use it in many different ways. Um, yeah, so let me know in the comments how you're going to use it. And then I'll pick a winner on live stream at the end of the month. So it'll be 29th. I know it's a long ways away, but it saves me a lot of time not to have to do like 3 or 4 videos throughout the month. If I just do it on stream in one go. So that'll be the 29th. Make sure you have your notifications on. I'll remind everybody as well. So if you want to get into the giveaway, you have to subscribe to my newsletter, right? So to do that, you come to my website. And once you're on this page, don't subscribe there. Go to here and then scroll down and then right here. So even if you've already like entered a contest with me before and you already put your email in there, go ahead and do it again. It's not going to send you 2 emails. It's just going to delete your old email and then add in your new one, the new one that you put in. So pretty much it's just it doesn't matter. I just need to know so I can use the software to get you into the giveaway. So you still have to put your email in here. And then it only takes 1 second. You'll see, watch, I put my email in, push that there. I'm done. Boom. That's it. All right, guys. So I will see you guys in the charts and have a good trading week.